Today's lecture will focus on how to utilize the accounting equation to record a company's different types of business transaction. The accounting equation says A equals L plus E. What does that mean? It means assets equal liabilities plus equity. You have to first understand what these terms represent. What are assets? What are liabilities? And what does equity represent? So you think about assets. Assets are things of value that are owned or controlled by a business organization. Liabilities are the existing debts or obligations of a business organization. Equity represents the owner's financial interest into his or her business organization, or it could be from the form of a corporation. This equation can be utilized by companies to record and keep track of their different types of business transaction. This accounting equation must always be in balance, meaning your assets must equal your liabilities plus your equity. There's never going to be a time when the accounting equation should not be in balance. So we're going to practice today recording some business transactions utilizing the accounting equation. So you ready? Okay, let's go. So I have here a list of business transactions, 10 to be exact, and we're going to use the accounting equations for this company to record these 10 business transactions. So let's get started. Number one, it says that the stockholders invested $10,000 cash in the business in exchange for a common stock. So the first question you want to always ask yourself, what type of accounts are being involved in each of these business transactions? So they invested cash into the business, which means that the cash account, which is an asset, is going to increase by $10,000. Now, if the cash account increase, what caused the cash account to increase? There's also common stock involved in this transaction. The common stock account also increased by $10,000. So notice that the accounting equation is in balance. My assets still equal my liabilities plus my stockholders' equity. Next, purchase equipment for $5,000 in cash. So once again, you want to ask yourself, which accounts are involved in this business transaction? Are the accounts an asset account, a liability account, or equity account? And are the accounts increasing or decreasing? So we purchase equipment for $5,000 in cash, which means that our cash account is going to decrease by $5,000 because we're spending money. So I'll put minus $5,000 to my cash account. But in exchange for the cash, I received equipment. Therefore, my equipment account increased by $5,000. Notice for this transaction, we had two different asset accounts involved. The one account being the cash account, the other being the equipment. Whenever you have two asset accounts involved in one transaction, one of those accounts must increase, the other account has to decrease. So notice that again, that the cash account decreased by $5,000, where the equipment account increased by $5,000. So again, whenever you have a situation where you're going to have two accounts on the same side of the accounting equation involved, in this case, two asset accounts, one account has to increase, the other has to decrease. Ready for the next problem? All right. Number three, we paid $4 cash for the May office rent. So once again, you're spending cash, so cash is decreasing. My cash account would decrease by $400. You want to ask yourself, if I'm paying the May office rent, when you're paying rent, what is that? that is an expense for the business. So I'm going to go over here to my stockholders equity section and put $40 under the, not 40, but 400 under the expense category. Excuse me. Teaching moment. You want to always make sure that your transactions are in balance, because if I left it as 40 for the expense account, when it's time to complete the account equation, my account equation would have been out of balance because I put down an incorrect number. So always make sure for each transaction that each transaction is going to balance out. Next, we paid cash for supplies. So I got screwed up a little bit. So now, again, I'm spending more money. So my cash account will decrease by $300, not $3,000. But my supplies account increased by $300. Once again, I'm exchanging one asset, cash, for another asset known as supplies. So I have two accounts on the same side of the equation. One account increased, supplies account. The other account decreased, being my cash account. Number 5, incurred $250 of advertising costs in the Beacon News on account. In accounting, it is critical to understand the terminology. When it says incurred advertising costs on account, what does that mean? It means that we have not yet paid for this advertisement. We're going to owe for this advertisement. So advertising is an expense for a business organization. But because I haven't paid for it yet, I now have what's known as a liability. I have a debt. We have a title called accounts payable that shows the existing debts and obligations of a business organization. So my accounts payable account just increased by $250 because I owe that amount of money to the news company, and my expenses just increased by $250. Now notice that they're on the same side of the account equation. Now indicate that both of those accounts are going to increase, which is true. However, when it's time for us to finalize the accounting equation, know that expenses are going to be subtracted from retained earnings to determine the total of our stockholders' equity section. So when you read this chapter, hopefully you read the chapter, look at the lecture notes, you will have a better understanding of some of this terminology, such as retained earnings, what are expenses, dividends, and revenue. And if you have further questions on it, definitely feel free to contact me for an explanation of it. Okay, let's keep going. Number 6, receive $4,700 in cash from customers for repair services. So for number 6, got to go down here. My cash account will increase by $4,700. And because I performed a service, that is known as earning revenue. So my revenue account is going to increase by $4,700. Next transaction, declared and paid a cash dividend in the amount of $700. So now we're paying out a dividend to the stockholders who are the owners of the corporation. So my cash account decreased by $700. And my dividend account just increased by $700. But again, notice, because with dividends, you're paying money to the stockholders, that's taking money out of the company. Once we're done, the total dividends are going to be subtracted to get the total of the stockholders' equity section of the accounting equation. Few more. Number 8, we paid our part-time employees salaries of $1,000. So whenever you say paid, think cash automatically. So my cash account would decrease by $1,000. And the money paid to my employees, that's an expense. So my expense account just increased by $1,000. Almost done. Next, pay utility bill for $140. So again, you're making a payment, so your cash account would decrease by the $140, and your expenses are going to increase by $140. For our last transaction, perform repair services worth $1,100 on account. So once again, in accounting, it is critical to understand the terminology that's being used. When it says perform services on account, it means that we've done the work already, but we have not been compensated. They owe us money. So we have an account called accounts receivable that represents money that's owed to the business organization. Account receivable qualifies as what's known as an asset account. So under my assets, I'm going to put the $1,100 increase to my account receivable. And because I have performed the service already, my revenue account increased by $1,100. So notice that for each of our transactions, they have to balance out. The account equation must always be in balance. Now let's make sure, before we wrap this up, that once we're done, that the entire equation is in balance. Are you ready? I'm going to use some more Excel tricks here. Highlight all my numbers. And I'm going to put my totals right here. So do my auto sum. So this is showing the totals that I have for all of my accounts. I'm going to highlight those. And let me just do a little different view so we can see everything. Freeze pane. Scroll this up a little bit. And let me highlight this section here. There we go. So what I want to do is get a total of all of my assets. So for assets, I have cash, account receivable, supplies, and equipment. Let me do a little different view. 1 second here. Unfreeze that pane. I want to get this part too. So let's freeze it as of right here. There we go. Okay. I want to see so you can see the headers as well. So for my assets, I got cash, account receivable, supplies, and equipment. So my assets total $13,560, the total of all of my assets. Make that bold. But my liabilities only have one account, which is accounts payable. That totals $250. So I like that. For my stockholders' equity, notice the marks here. I'm going to add my common stock plus my revenues, but then minus my expenses and minus my dividends. Again, you're going to add the common stock plus your revenue, but minus your expenses and minus your dividends. That's because common stock and revenue will both increase your stockholders' equity, whereas expenses and dividends, they're going to decrease your stockholders' equity. So I have a total for those numbers. Now remember that the account equation must do what? I'm going to do that. Let's do this again. Let me put it over here. We add that plus this minus here minus here. All right. So the account equation must always be in balance. Okay? So if I add my liabilities plus my stockholders' equity, it must equal my total assets. So I'll come down one line more. There we go, 13,560. And if I add liabilities plus equity, it also equals 13,560. So remember that when recording your business transactions, that your accounting equation must always be in balance. Your assets must equal your liabilities plus your owner's equity. This is our first lecture on how to utilize the accounting equation.